The no income and no employment loan, also called a no ratio loan. What's up, everybody? It's Jeff Trevarthen, Jeff the Mortgage Pro. Thanks so much for joining me on this one today. This is a crazy option that I think is like, people are going to be like, oh, I don't know. I don't know what your reaction is going to be to this type of video, but these loans exist. And these were things that were typically used before the financial crisis, probably in the wrong way. And what I want to tell you about today is the no income, no ratio loan, to use it the right way today, and who would probably be a great person to be able to get this type of a loan. It's also called the no ratio loan. So that means what we're doing is we're not verifying any type of income that you have, and we're not looking at any of the debts that you have. So as long as you meet a couple of stipulations that we'll talk about here in a few minutes, you can get a loan to buy a primary residence or a second home with this type of a product. Okay. All right. So here's what this loan is about. It's focused on underbanked and underserved communities, and it delivers a holistic approach to credit underwriting and loan origination. Okay, so that's the whole idea behind this type of a loan, because not everybody can get just a normal mortgage like we think that we can. Okay, so here's some people who may qualify for this type of a loan: low income individuals and communities, limited income history type borrowers, limited or no credit history type of borrowers, inadequate income documentation type borrowers. Okay, so this could be ideal for self-employed people for less than 2 years. It could be for entrepreneurs. It could be for people with significant assets but no job or traditional income. It could be for borrowers who just want don't want the major hassle of trying to come up with massive amounts of documentation because maybe their income is complex, or maybe they don't have the right type of income. They just want an easier process for getting a loan. So this is definitely a product for those people. Okay, these are exempt from what's called the ATR rule, or the ability to repay rule, that was set forth in the Dodd-Frank Act and Regulation Z. So this is a perfectly legal loan, but again, it has to be for the right person with the right stipulations. And hopefully, that gets your ideas turning as to who might qualify for this type of a product going forward. So let's go through some of the different key features of this no income, no employment loan, or also called the no ratio loan. It's for purchases, rate and term refis, and cash out refinances. It is for fixed and ARMs, and it is for eligible borrowers that include U.S. citizens, permanent resident aliens, non-permanent resident aliens, and as long as you're a non-permanent alien with a lawful documentation, you can actually get this type of a loan. The minimum credit score that we have on this is 660. Okay, usually the better the credit, the better the bucket in terms of the rates are going to be. The minimum loan amount is $100,000, so can't do anything less than that. And the maximum loan amount we could do on this is $2 million. So you can go up to a pretty high loan amount for this type of a loan. An impound account is required. So that means you have to pay your taxes and insurance as part of your monthly payment when you're doing this. Most states are eligible for this, but there are some states that are not eligible. So check with me if you're thinking about this type of a loan. Check with me to see if your state is eligible, to see if you can actually get this loan in your state. This is for only, as I mentioned earlier, primary residences and secondary residences. You can have up to 80% loan to value. Okay, so as long as you have 20% down or more, you can buy a single family residence. You have to have, for condos, 25% down or more. So that's the main stipulation with this particular type of loan. You have to have the down payment and cash to close to be able to do this type of a transaction. And then here's the other major stipulation with this. You need to have reserves. That means money left over when you're trying to get a loan. Okay, it doesn't have to be money that you put into the transaction. It's just to use as a risk calculation for lenders. So in the instance of this, for the 20% down option, we need a minimum of 12 months worth of reserves. And 1 month of reserves is just your principal, interest, taxes, and insurance monthly payment. And then you multiply that by 12, and that's the amount of money you need in reserves. Now, we can use things like savings accounts, checking accounts. We can use stocks or bonds. We can use 401ks or IRAs. All of those things count towards reserves. And again, it's not money you're putting into the transaction, just uses a risk calculation for this type of a loan. A lot of other different types of loans as well, but this one in particular is one of the main stipulations is you have reserves available. So down payment is key, and so are the reserves. Those are both key in this type of a transaction. If you're putting 25% down or more, then you only need 9 months worth of reserves. So that number goes down the more money that you have in the transaction. Delayed financing is allowed on this. So what is delayed financing? It means you buy a property all cash, and then within 6 months, you could take out a loan on the property. Now, usually if you're not if you're buying a property all cash and you are not going to take the money back out, you have to wait a whole year before you do a cash out refinance on that. But a delayed financing stipulation allows you to do that within the first 6 months if you want to do that. So you could do delayed financing on this. If your loan amount is going to be greater than 1.5 million, so 1.5 million up to 2 million, then you need to have 2 appraisals done on the property. And remember, we're going to take the lower of the 2 appraisals when you're purchasing property when you have 2 appraisals. Okay. So hopefully they come in at the same value, which oftentimes they do. If one of them comes in a little bit less than what the purchase price is, then we have to use that one in particular. Okay. And here's a crazy stipulation about this type of a loan. You can have 100% gift funds are allowed for down payment, but they're not allowed for reserves. So we can move some numbers around, but 100% down payment on this particular loan, as long as you have the amount of reserves in your bank account, you can get a no income, no employment, no ratio type of a loan like this. One small stipulation on this particular transaction or this type of loan is that you have to have a counseling class that you have to take. It's one class. It costs $75. It's not super expensive. It takes an hour or 2, and you just have to do that so you can get this type of loan. That's crazy, but you still have to do it. No matter how many times you do this type of loan, okay? So just an idea on this, you're probably thinking, man, this is the greatest type of loan ever, and it is. I think it's a very great loan, and it fits a lot of those borrowers that we talked about earlier in this scenario. But just remember that the interest rates on these are not going to be prime interest rates. You're not going to have your prime 30-year fixed conventional interest rates on these. These are going to be definitely a little bit higher. Probably a lot higher in most instances. And they also are going to have discount points associated with buying the rate and paying your loan officer the cost of origination. So anywhere from probably 1.5 to 3 points associated with these types of loans, depending on your credit terms, maybe up to 4 points on these types of transactions. So just be aware that extra cost is going to be something you're going to have to pay. But if you think about the flexibility of this, not having to verify income, not having to verify any employment, that's the reason why there's extra costs associated with doing that. That's because of the easy way you get around that. You still have extra costs to do this type of loan. What a great loan this is. I hope that this video is going to help some of you out there. And if you are somebody who might need a no ratio loan, please go ahead and reach out to me. I'm going to drop my calendar link down below. And I'd love to talk to you more about doing a no income, no employment, no ratio loan. I will see you on the next show. Have a great day. Bye.